I have been,
Okay,
I've been so busy, I've not given enough attention to this taxation. Somehow I've been shielded from teaching taxation, and I think it's a good thing. So I just want to come in to get refresher, then I can then go back and then work on my assignment and submit.
brilliant. That's no problem. We can assignment. We have some samples on our Moodle. Further, I can give you, and we can go through the basic stuff. Hello, good afternoon, Tariq. Thanks for joining.
Good
Okay,
afternoon, Tariq.
good afternoon, Tariq. Can you hear us?
He's muted.
Hello. I think so, maybe mic issue. Okay, so we'll start. So this lesson is about calculate income tax and national insurance contribution for the taxpayer. That will be our discussion. We'll keep it short and simple lessons, and further, in our assignment, we'll go through more.
Sorry to disturb you. Did you already started? It's
Uh,
one
we just,
o'clock. That's now.
no, we're just starting now.
Okay, it's starting now. Okay. All right.
Thank you. So, Tariq, if you don't mind, quick introduce yourself.
Yeah, my name is Tariq. I live in London. I'm just doing that personal taxation in this session, obviously. That's what else I need to introduce. I don't know, to be honest.
Yes.
I'm working as a senior accountant in one of the accounting practice. That's it.
Well, thank you. I think so. Please, can you introduce as well? You know each other then, huh? I think so. We know each other.
Mm, Yeah.
Okay. Thank you. Okay. So we'll start. Please, if you don't mind to introduce yourself as well, please. Again, sorry, we know each other.
You mean me?
Yes, please.
Oh, okay. Oh, my name is Matthias Ako. I am accounting and finance lecturer with Global Banking School here in Birmingham. I'm in partner. Our school is in partnership with Christ Canterbury University, and yeah, that is me. And I teach accounting and finance. Currently, I'm leading the research and ethics module for the level 6 students and level 7.
Great. Brilliant. It's good to know, so we can. Brilliant. As you know, my background is exactly the same, which you mentioned, I'm also teaching. So we'll go through this. We are going through ILO2, which is, last lesson we discussed about the resident and the residency rule. We discuss about, how can be and the resident, liable to pay the tax. We discuss about tax planning, how, because which is illegal, we can plan our taxes. We discuss, the key rates and things, during our lesson one, and we discuss about ethics, 5 professional code of ethics, PPCIO, popular people chat in office. So we said, professional competencies, professional behavior, confidentiality, integrity, and objectivity, which we went through the professional code of ethics. Today lesson always good to be at the start, we can reflect, employment income, saving income, and property income, which we can look further in details. Please, tax is a subject, which every year's grades are carry on changing. So please, always good to be follow the Finance Act, which are normally really demonstrate, more. We will follow, the whichever year Finance Act, we will follow the personal allowance, application of the relief pension, calculation of the income tax, calculation of the national insurance, and tax planning. Further, because our overall uh, discussion will meet these learning outcome or indicative content. So please, already personal allowance 12,570. If you're earning 1 to 37,700, it's a 20% tax after the personal allowance, and it's a dividend rate is 8.75. So please, tax planning is illegal, so we can advise, the and the saving income basic rate is if you have, if your basic taxpayer exempt limit is 1,000, and if you're a higher taxpayer, then it's a 500 dividend. All taxpayer, it's 1,000, and then of course, nil band, and then of course you're paying 8.75 up to 37,700, then you're paying 33.75, used to be 32, and this carry on changing. So please, follow marriage allowance, which we can transfer 1260 partners, and if you never transfer, so you can go up to 5 years back, so car benefits. So please, we need to be look around those according to the CO2 emission levels. Electric, and of course this again carry on chaining, so we need to be look around each. So I mentioned here the website which is open tuition, and under F6 exam, which normally for ACCA we follow. I'll share with you all the books, because I requested new to date, the booklet, but we follow the rates, only the application of the rates, but these, all Kaplan, BPP, Osborne, because I normally teach AAT and ACC and all other, different qualifications. And normally we teach in universities, and these, of course, is approved from ACCA, these qualifications as well. Okay, so corporation tax, please, again, we can look around Finance Act, whichever you want to follow. So the corporation tax rates, because this is more an inherent tax, that's, trust and gifting trust and property transfer, that's, sort of knowledge is also good. Capital gain tax, which we can look around, that's, on, and the relief, according to the rates, class 1. So we can look around class 1, national insurance implies 1 to 12,000 is 570 is no, and then is a 12%, and then please is a 2%. If your income is above, then your NI contribution will drop. 1 to 9,100 is exempt for the employer, but if you're earning more than that, 13.8%, which further we can look around new Finance Act, which we can go through. When we'll do assignment, we'll apply the new rates, but we can look around 2024 5 up to 31st January, which we can follow the finance sector. Okay, so please, I included some links for you, which is according to ACC, a lot of examples, good to use, which I'll share with you. Always good to be, if you type ACC article, those I will share with you the rates and things as well accordingly. So please, we need to be follow those. Okay, let's look, any question, please, anyone? If you like to ask, so feel free. Yeah?
Not yet, not yet.
No, that's fine.
Thank you. So please, example 1 for the tax year 2023-24, June trading profit is 184,000. Income tax liabilities. So we can look around the trading profit, personal allowance, because if you are earning more than 100,000, your personal allowance will finish. If you are earning more than 125,000 above, your personal allowance will be 0. It means you have to pay tax on all income. Yes, so taxable income is 184. So first 37,700 is 20%. Remaining will be 40% up to that point, and then additional rate will be 58 point. And then of course, we can look around each year, whichever year you follow, you can divide, and we can calculate the tax liabilities. So 125, 140, that's, exceeding that, we can look around, your personal allowance will finish. Every pound you earn, 50 pence will be reduced your above than 100,000 of your income. Okay, so previous sources of income can be non-saving, saving income, of course, dividend incomes, all, which we can look around accordingly, and investment income, if you have, please, which we need to be look around according to the rates. So tax planning is illegal. So if a husband, wife, and all in the scenario, you can advise them. So this, of course, I picked the examples. It's good, a few years even back, but we can look around, apply the rates. Again, the rates is the issue. Go back to look around the finance second, the 37,700, still the bracket, which we can follow 20%, and then 40%, and then 45%. So please, net income, then personal allowance, that was old, 12,500 used to be, now 12,570. So which we can non-saving income, which is mean employment income. So always good to be personal allowance first you can minus from, and we have the salary income, which is non-saving income, then the saving income, because you look, is it the person is the basic taxpayer? If the basic taxpayer, then of course, the £1,000 is exempt, otherwise it's £500 exempt, the limit, and dividend received is 7,000 is there in that case. So please, if you look, we calculated in our example, these, non-saving basic is 20%, then remaining, because to 37,500 was the old, but now we have 37,700. So please, you can follow the 40% and we can calculate. Then saving only up to 500 is no tax. The rest, remaining 800, because 1,300 is the income came from through interest, and that's 40%. So please, some like if you have the premium bond, I'm not sure you ever bought the premium bond. Anyone knows premium bond?
Premium bond.
No, premium bond, no.
Okay, so we have 23 million people in the UK. They have the bond. Every month is a lucky draw. Minimum you can spend £25, 25 numbers. Yes, your money never wastes. Your money will stay. Whenever you need the money back, click it and put back in your account. And I have a friend who won it 10,000 last month. Yes, and couple of our bought as well. It's quite good to buy, and that's no tax. Yes, on those bonds. So you don't have to pay tax anything, but your money is there. Instead of keeping in saving account, so you can put it NSNI, the website is National Saving and Investment, and that's approved by the government, and that's you can look around for the sake of it. It's good for the client, if you want to advise. So please, any tax we paid through PAYE, and then of course remaining which we can. Okay, calculating the property income, please. Property income, again, that's a very gray area, because a lot of property income we can, like some expenses we used to be claim a lot, like capital allowance, these, but now on the personal property it's difficult to claim. It's better to be advised to the client put in the company that as a business. Yes, so that's then of course you can claim plenty of stuff there. So which is property income, we have 141 bank interest and all. Then we can look around non-saving income, which is in that case, which we can look around the personal allowance. We've been not, because the income is higher than 125,000, there is no personal allowance. And then please, we can look around the bracket, 20%, 40%, and 45% tax rate. And the dividend, which we can go through again, 32.5%. That's, which we can calculate all these, according to the rates. Huh? Okay, then please, we can look around 2.2, which is we have to apply the personal allowance. So if you assessment criteria apply all dividends 12,570 for 2019, or we can look around current now is 12,570, please now. So we can go back to deduct net income to give the taxable income, and not transferred and cannot be offset, get the capital gain loss if used. So please, we can look around the losses can be used to adjust if it's a profit. So restricted personal allowance, which we can look around anything 100 and more than 50% need to be adjusted. That's if it's more than 125, no personal allowance. So that can be. So if we look in this case, the 50,000 to 90 and in deducted it. Yes, please.
So are you saying that dividend income is subject to further tax?
No, I'm saying dividend income will be taxed according to which tax bracket you fall.
Okay, because from this, what I can see here is taxable income is 46,000 and 90, and that also include the dividend income of 7,000.
Okay, so this is the dividend income is a separate, yes.
Okay.
So first we're looking, let's say employment income, salary is 50,000 to 90, yes.
Yeah.
We have a bank interest income, which is a saving income, yes. Dividend income. We
Yes.
minus 12,500, which is our personal allowance, yes. After
Okay.
personal allowance, our employment income 37,790, our saving income 1,300, our dividend income 700. Yes, sorry,
Yes.
7,000. So when we calculate our, we'll go back to because that will be applied. That year was 37,500. Now we have a 37,700. Yes, which is
Yes.
20% tax. Yes, up to on 90 pound that will be 40% tax. Yes, and the saving income, because we are not a basic taxpayer, we are a higher taxpayer. Yes, because either than 90 is more, yes, than 37. So we are moving to the next bracket now. So 500 is only exempt. So 800 you will pay on the saving, you will pay the tax, with the rate off. So you have to look around because
Oh my goodness.
we're not basic taxpayer, we are a higher taxpayer. Okay. So if you're not basic taxpayer, the dividend rate will be 8.75. Your dividend rate will be 33 point. The new rate, yes. In the past, that was 32 points. So if I'll take you back to the rates, yes. Sorry, I'll take you back to the rates. So whichever year rates, you go back to here, look the dividend rate, yes. Can you see here?
It's frozen. I can't see it yet.
Can you see now?
It's still on the same page, page 23. It hasn't changed yet.
Sorry, maybe signal up. Can you see?
It's still there. It's on page 23. It's okay. Go proceed. I'm just surprised that at any income level, dividend income is being subject to tax, and that's
Yes.
why I'm bothered, because that's not from my experience what I'm coming from.
Yes. So because you have only the exempt limit is, so if I look, in the rates the year, yes, because
Yeah.
always go back to the rates, look around the rates, because you've been given dividend is only 1,000. All taxpayer 1,000 is exempt. Nil rate band in that year was, yes, in 23. Yes.
Okay.
So it mean if you earning only dividend, you have 1,000, you're not paying tax on it. Yes.
Mhm.
If you're more than that and you fall in the basic taxpayer, your rate will be 8.75 instead of 20% on the salary. Yes.
Yeah.
So that's, the catch really. You have to think about, because that's not a personal allowance there. So only is 1,000. Yes. If the
Wow.
dividend.
Wow.
So that's sometimes you advise to the clients. Yes. They come to you and ask you advice. Okay. So please, we can look around available all the individuals. Yes, we discuss. So we need to be think like in this case, which was 7,000. Yes.
Yeah.
So you have to calculate the tax because it's not a basic taxpayer, it's a higher taxpayer because its income is more than 37,500. That year was 37,500, but now it's 37,700. Yes, you fall in the
Okay.
higher tax rate bracket. Your tax will be 40% on that.
Okay.
Yes, because if you're a basic taxpayer, yes, you can uh, pay the 8.75. Yes, that's lower tax rate because when your
Yeah.
income go, doesn't matter which source of income you are. Yes, you have to look each, like a property, like or expenses you can. So that's why the tax planning is the area really is a deep dive into each scenario can be different. Yes, maybe we can say to husband, you can transfer to the husband name or the wife name. Yeah, because their 12,570 is exempt. Every individual have 12,570. If your partner not working, you can transfer 12,60 on your personal allowance. You can get exemptions. Yes,
Mm-hmm.
and you can save, and you can go 5 years back. Some people do tax planning. Yes, they look the losses to be transferred up to 5 years. Let's say you have a 30,000 loss. Yes, and you have the profit in the following years, so you can transfer that 30,000 each year to make it your tax bracket is lower and you save on the taxes. Huh? Or in the business, we can say, come on, buy the car and we can go claim the capital allowance. Huh? We can't claim the depreciation. Depreciation unallowable expense. It's not
Sure.
for the tax purposes. Huh? So that's which we can look around in that perspective, like benefit in kind. After 50,000, technically you can't claim now. Even your child benefit, you have to pay tax on it. Yes,
Wow.
that's unfortunate. Those people work too much because some people say I'm earning 100,000. Oh, you're not really earning 100,000. You're earning 100,000, but after tax, what you're getting is a slightly different because of course, your pension now 10% depends. Yes.
Yeah.
No doubt your NI will drop, but your tax will go double. Yes, because from 20 to 40 plus your pension 10, that makes 50 plus your 2% NI, that makes 52. Yes,
Yeah.
that's 52. So we know very well in profession because we're getting when the wage slip when we are very, oh, come on. Yes. And sometimes maybe other people say, come on, I'm well off. Huh? Okay, so benefit, exempt benefit. Yes, we can look around taxable benefits. So living accommodation, where, when, and the cars and the company car. So please, if you have the company car, it's come under benefit. Never take the company car. Sorry, I'm not saying you not take in that way, but you look around what benefit you have to taking the company car because your personal allowance will reduce to 6,000, 8,000, depend on the value of the car.
Mm.
So that's why we advise to the clients, not removal expense like you moving jobs, from Birmingham to London or coming in Leeds. The 8,000 you can claim, employment allowance. Yes, relocate as a teacher. Huh?
Doctor, sorry, I don't know what's happening, but your slide is not changing for me. It has been on 23 since.
Why not?
I don't know. I don't know if should I log out and come back, or I don't
No,
know.
no, no. It's same here as well. We stuck on 23 slide.
23. Yeah, it's not going forward.
Investment page.
Yes.
Okay. Can you see Tarak now?
Yeah.
Now it's moved. Now
It
it's
has,
moved.
it has changed now.
No, it's moved. But you need to show the proper like.
Can you see now? Slide, can you see now on
With the slide is changed, but it's been little bit high from the top. You
Yes.
need to
is it better now?
scroll down little bit. No, 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 no.
Okay. I think so, maybe. Can you? Is it better now?
Yes.
Yes. From the top now, yes.
Okay, no problem. I'll make sure I'll share with you these. It's on our Moodle page as well, but I'll share with you.
All right.
So 8,000 you can claim, relocate allowance. Huh? If you're a teacher and you're moving from Birmingham to London and all, yes, relocation allowance is 8,000. Yes.
Mhm.
So which is quite handy. And if you're living payment, if you're staying in the UK, £5 per night is allowed. Yes, £10 per night is overseas. That's by law. So that's which we need to be look around. Any other staff benefit we need to be think about in those perspective. Yeah, employment attend the course can receive free pay up to £15,480. No tax. Yes, that's which we need to be look around each year again. Okay, so please, if we look the benefit, so different sort of benefits, CO2 emission levels we need to look around, please. That's each year. The car emissions, yes, like your 107 grams or above, or less, so we need to be again. So if we look there, let listed price of the car, what you paid, yourself, you can take out from if you're paying yourself, rest come benefit, and then we can look around the rate there. Yes, so 29% of the amount you can count towards your benefit, and less contribution for use the car if you any contribution you're doing yourself. So that's 480 in that case was, which we minus, and the fuel benefit. Yes, please, it's better to be claim the fuel allowance, which is 45 pence per mile, first 10,000 miles. Yes, and 25 pence per mile. So that's, instead of the company car, is better to be get the fuel. That's, which we can look around in that perspective. Okay, any question there, please? We look, more.
No.
We look more scenario, and I'll send you little handouts. This just on the insurance, where a lot of question, and you can look around. In the next lesson, we'll can go back to and we'll calculate ourselves. Or I can show you on the software, which normally we use. Normally we use software more than in real world. But of course, we need to give the advice, the client advice accordingly. Calculate the total income tax liability, national insurance. We can calculate, the given data. So please, whatever we said, 9,100 is for employer, no tax, and 12,570 no NI contribute. Okay, so we we can look around accordingly. Paid on the gross earning, class 1 employer, yes, contribution, which we seen in the rates, and we can calculate according to employees, yes. So let's we look in this case. If we look, the class 1 employees contribution is a 12% on the gross earning between 8 and 50,000. That was in the previous years, but now it's been increased to 12,000. So let's so that's we need to be look around in that perspective. Class 1 employer contribution is 13.8%, please, after 9,100 now. Okay, so employer allowance is went up to 9,000. So you can claim as an employer 9,000 allowance. It means you up to, if you have a more than 9,000 to pay NI contribution, you don't, then of course, you can adjust the allowance. Any question, please, here?
Not for me. Thank you.
No, thank you.
Thank you. So these, some calculation which I'll send you. And if you want to work towards the distension criteria, so please, we need to be look around those perspective. Yes, if you're giving money to the charity, that you can claim and the rebate. Yes, if you're giving the pension, so pension, when you withdraw, now you need to be pay the tax. Yes, and charities and all charities being set up, gift aid, that's which we can look around, or we can add a few example to meet this distension criteria. So when we'll do the assignment discussion in not next lesson, the following week, our meeting, and that's which we'll go through these gift aids and some these type of different schemes to just so we included those. So please, in your I'm going to share with you the booklet, please, if you don't mind to look around employment income, property income, some example before next week. Yes, and then we'll go through accordingly. Any question if you have today?
No, it's
No, not
okay.
for me.
Okay, so I'm going to send you some examples to look around and some calculations for the text, and then we'll do our meeting next week. Okay.
All right.
Thank you, and have a lovely weekend. Nice to meet you both. Yes.
All right.
And I'm going to share you, and I'll create the chat, online. So.
And are you gonna do? Are we gonna conduct the lecture on task 3 as well, like lecture 3?
Yes, we'll do.
Next Saturday.
Next Saturday.
All right. Okay, because I have started that one. I'm stuck on the very first thing. The differences between.
We can arrange tomorrow meeting.
If you can, that'll be good, so I can finish my thing up. I mean, like I have finished already a couple of tasks, and only the last one is left over. So that's how I wanted to finish it ASAP, so that I can start my other subject, please.
Yes, sure. Great.
Fantastic.
No worries.
Do we have this video recorded and is it available for us?
Yes. I will send you, and I'll send you, the examples more, which we'll go through in. So we can look before coming, and then we'll go through straight example in the next lesson.
All right.
Okay. Thank you. Have a good weekend, both.
Thank you so much.
Thank you very much. Thank you.
Bye-bye.
Bye now.
Bye.